All right, hello. This is Daniel Barrett from AdWords and what I wanted to do is put out some data on how COVID-19, the coronavirus, is affecting the online marketing world for motivated seller leads. If you are a real estate investor, you know that motivated seller leads are your bread and butter. This is how you get deals, how you find off-market properties, so on. So how is the current coronavirus affecting how we get those leads online? Couple things. I'm recording this on March 17th. Obviously, this is an incredibly fast moving event and things are changing very rapidly. And of course, we don't really know how things are going to end up and exactly what's going to happen. So what I'm going to be doing is trying to put out as many of these updates as I can. If you're not familiar with me, AdWords Nerds, which is my agency which works with real estate investors to find motivated seller leads, we have probably the biggest single data set about motivated seller searches in Google of anyone outside of Google. Certainly the biggest data set that anybody ever shares publicly. We have worked with hundreds of investors across the country, big and small. We spend millions of dollars in ad spend just looking for motivated seller leads every single year. And so we have a very broad-based data set that shows us very exactly what searches are happening, how they're happening, what they cost, etc. So what I'm going to be doing is pulling some of the data that we had basically up until March 16th of 2020 to show you kind of what's going on in the market right now and to put it in some context. Like I said, I'll be updating this as we go. So let's jump into the data here. The first data I want to share with you, I want to give you kind of a trend line to put this in some context. So these lines that you see here, this is monthly data. It goes from January 1st, 2018, all the way up to March 16th of 2020. Okay, and obviously, like, you know, as I recorded this, March is about half over. So the numbers that we see for March are only about half of what you get in the monthly data from everything else. Okay, so what we can see here is February 2020, we had just under 50,000 clicks and just under 4 million impressions. Now, an impression is anytime an ad that we run is visible on the screen to someone after they search. And because we only target motivated seller type searches, you know, things like sell your house fast and we buy ugly houses and stuff like that, it's basically a proxy for how many people are searching in general. So one of the things that's really interesting is that February of 2020 was actually one of the more aggressive months we've had in the last 2 years. And in fact, if you look at the general trend line, the general trend of impressions for motivated seller type keywords, the number of people searching, has been in gradual decline since 2018. The number of clicks has stayed relatively stable, but the number of impressions has gone down. Well, February was a really aggressive month for us, and there were way more searches than average, way more clicks than average. And that was really interesting, right? Now, as we headed into March, that's when, there started to be much more social distancing and self-quarantining and stuff like that. You saw a lot more governments sort of step in and make official proclamations. Trump made his sort of official declaration using the Stafford Act, just a couple days ago as I'm recording this. So, that stuff is more recent. And what we do see in March is a slight decline. We see a slight decline in clicks. We see a slight decline in impressions. But the thing to keep in mind is this is coming out off of a significant peak. And we're only halfway through the month. So even though we're only halfway through this month, we are still better than the preceding months, and pretty much every preceding month except February. So while I see a slight decline, I'm viewing that right now more as regression to the mean more than any serious correction in the market. So let's look at cost. In Google Ads, the number that I'm looking at is CPC, or cost per click. This is the average amount that we're paying for someone to click on an ad. And this is a number that varies pretty wildly depending on like your market. Certain markets with really high property values tend to be more expensive. Similarly, it goes up with your competition. If you have a lot of competition, a lot of other investors in your marketplace, this price will go higher. Okay. Now, what we generally see is that, yes, prices have ticked up slightly in March. I believe in February, our prices were about $4.50. It has ticked up slightly to about $6.67. So we're up about, what is that, $2, okay? Now, what's interesting is that compared to December, this is a significant drop. In December, we were paying anywhere around $12 to $12.50 per click. And it was similarly high in October and November. So remember that February was an unusually strong month for these kind of searches. So what's happening is, yes, we are regressing to the mean. Things are slightly more expensive, but we're still significantly cheaper than we were 3 months ago. Now, I have an idea of why that is. I'm going to show you that in a little bit. We get a little bit further in the video, but just know, okay, generally impressions are down a little bit, clicks are down a little bit, but still significantly better than they have been overall. Costs are up a little bit, but still significantly better than they have been overall. Now let's look at conversions. Conversion is when someone turns into a lead. For us, this is a phone call from a seller that lasts more than 30 seconds, or an email, right? Or a text message for that matter. Now we had this is weekly data now. I'm switching from monthly data to weekly data. We had 227 leads the week of March 9th. Now notice that this is actually an uptick. This is better than we did even in February. So even though February was a significantly aggressive month for us, the first week in March actually did a little better than that, which is really interesting. Okay, so what does all this mean? Now, obviously it's very hard to say what all this means. These are data points that we can kind of string together in a narrative. Obviously, we got to be careful because everybody has biases. Everybody has, I personally have skin in the game, right? That's what I do for my clients. Clearly, I'm going to be biased a little bit, but I think the numbers are painting a picture for me, and so I want to kind of give you my interpretation. All right. If you look at search data in terms of the volume of searches, the number of people clicking, I don't think you see any significant decline. Remember, we're coming off a peak. We're still significantly better than we were in October or November or December of last year. So generally, search volume is high. Okay. At the same time, you see costs ticking up slightly while leads also go up. What does that mean? Here's what I think is happening. I think that much like in the stock market, right? If you are investing in stocks and the stock market goes down, if you are using a strategy called dollar cost averaging, which is what dollar cost averaging is every week, you buy the same amount, let's say dollar amount. So like every week you put $500 in the market and you go and you buy like the S&P 500 or something. Every week, 500, 500, 500. Now, when the market declines, the average price of those stocks goes down. So when the market is declining, those $500 that you put in every week, like clockwork, right? They buy more of the stocks, right? Imagine you're buying candies. The candies go, you're buying $500 worth of candy. 1 week they're $1. You buy 500 pieces of candy. But the next week they go down to 50 cents. All of a sudden you buy 1,000 pieces of candy, right? Average price goes down, you're buying the same amount in terms of dollars, so you get actually more. Now, similarly, Google Ads, Google advertising is a market. Now, what happens is when our competition withdraws from the market, let's say our competition lowers their budget, so they run ads for less of the day, or they just stop spending on ads altogether. What ends up happening? Well, the same amount of money that we spend, let's say we had a $1,000 budget for the month, goes further because we have fewer competitors in the marketplace. What this does in Google Ads is it makes our ads end up higher up on the list of ads. We end up in the first spot, let's say, where before with the same exact budget, we were showing up in, let's say, spot number 2 or spot number 3. What happens when you get into spot number 1? Well, you get a similar number of clicks, or you get more clicks, and you end up getting more leads. What I think is happening here, and the reason I think we saw that slight uptick in price, is because our clients are spending the same amount. We did not really change our strategy when all this ended up happening. So they are getting higher ad positions, and they're getting more leads from those clicks because there are fewer competitors in the marketplace. So the same dollar spent in Google Ads right now is actually going further than it would, let's say, 2 weeks ago. Now, is that going to remain the case? I really don't know. What's going to happen a month from now? I really don't know. What I will say is I'm going to be sharing the data as it comes in, as we see things changing. I will be updating. I'll be putting videos on Facebook, on LinkedIn, on YouTube, on our blog at AdWordsNerds.com. and our Facebook group at AdWordsNerds.com/group. I will be updating this, so follow me wherever you can. I'll be trying to be as transparent as possible about what's happening, at least in this part of the market that we see. And if you have any questions, comment below, let me know. I'll be happy to get into it for you. And like I said, people, stay healthy, stay rational, because I'm not saying that reacting to this is irrational by any means. I think this is a very serious situation, but I want everyone to make our decisions, myself included, based on what we really see happening, not based on our worst fears of what could be happening. So I want to react adequately to what's going on, but I want to make sure that we watch the market and that we capitalize wherever possible on whatever opportunities present themselves. Because in a time where people are nervous and where people are fearful, there are always going to be opportunities that arise. We just have to be present enough to see them. So I hope that makes sense. This is Dan Barrett signing off. Let me know if you need anything, and I will help you in any way I can. And stay healthy out there, folks. Bye-bye.